So, hello. I will be the one reporting the corporate income tax return. So, under this topic is I will talk about that this topic is under the Philippine tax law. It is fundamental condition that guarantees corporation and partnership considered as corporation accurately. So it records their revenue and pay their taxes through quarterly reporting and annual final adjustment. So, but before that, let's talk about the objectives. The first objective is to analyze the operation and legal framework of corporate income taxation, to focus on quarterly cumulative reporting and final annual tax adjustment, to explain how corporate income tax process are implemented and managed, to provide guidance for financial practitioners and students in handling tax liabilities accurately, and to support a better understanding of proper tax compliance and computation procedure. So, every corporation or partnership tax like corporate shall file a quarterly summary declaration of its gross income and deduction on cumulative basis. So what is a cumulative basis? So when we talk about cumulative basis, it means that when a taxpayer files their quarterly income tax return, they report income and expenses cumulatively from the start of the year up to the current quarter rather than reporting for a single period. So, this method enables the BIR to keep an eye on a company's financial activity and tax status all year long. But let's talk about the most important um, terms in this topic. So later on, before we proceed to any computation, is we know what are the things that I am referring to, so it will be much easier. So first is the quarterly returns. So file and pay File and pay the quarterly tax return within 60 days after each of the first three quarters, regardless of the accounting period. So, in addition to this definition, it also preventing significant unpaid tax obligation at year's end. So this criterion guarantees consistent tax collection by spreading out tax payment through the year rather than making a single sizable payment. It also encourages companies for a better manage for the companies to better manage their cash flow. Next is the adjusted or final return. Final File the final return by the 15th day of the fourth month after the year end. So, in order to verify that the total taxes are paid during the year correspond to the real tax burden based on the company's full year financial performance, the final return is used as a reconciliation tool. Next is the payment of income tax. The final tax due is the remaining balance after the deduction quarterly payment. Any excess can be refunded or carried forward to the next year's taxes. So, when we talk about overpaid taxes, it can be it can be repaid or carried over as a tax credit for subsequent quarterly income tax obligation. So it is according to BIR. So this maintains correct tax compliance while guaranteeing equity and preventing taxpayer from losing surplus payment. So before we proceed to an illustrative example and the procedure, let's have a quick recap. So I talked about the tax compliance earlier. So tax compliance requires adherence to statutory time frames. So according to the existing tax code, so corporations have 60 days from the end each of the first three quarters of the taxable year to file their quarterly income tax return and pay the associated tax. So additionally, the final yearly income tax return which contains the reconciliation of all quarterly payments. It must be submitted by the 15th day of the fourth month after the fiscal or calendar year. So I also mentioned about the tax credit and carryover. So overpayment management methods are provided by the Philippine tax system. The National Internal Revenue Code in 1997 states that if a firm overpays taxes during quarter, the excess amounts are considered tax credits. So these credits can be carried over and applied against the expected quarterly income tax liabilities of the following taxable year. This keeps income from being taxed twice and guarantees that company won't lose the capital value of its overpayment. And also, let's talk about which is very important. Let's talk about the normal corporate income tax or NCIT and minimum corporate income tax or MCIT. The other one is NCIT and the other one is MCIT. So the law requires corporation to pay either the NCIT or the MCIT. So please remember this one, whichever is higher. So in order to guarantee that they contribute to the national economy regardless of their yearly profitability, profitability. While the MCIT is calculated as a fixed proportion of gross income, so it is the MCIT is 1% of the gross income, and the NCIT is based on the taxable net income, which is 25% of the taxable net income. So this minimum tax stops businesses from reporting fictitious losses or low net income in order to completely evade from paying taxes. Now that we all know about that, now let's proceed to an illustrative example. So the example here is the Balena Corporation, which started business operation in 2021, shows the following information of the year December 31, 2020. So, in 2021, the Balena Corporation paid a total of 110,000 in quarterly taxes to the government. However, when they finalized the annual return, they calculated that they have actually owed 85,000. So that is why it was deducted for that year, because the government does not typically refund the cash automatically. They allow the company to keep it as a tax credit. So as I mentioned earlier, so this credit is legally recognized as prepaid asset. This mechanism is supported by the National Internal Revenue Code, so which allows for the carryover of excess quarterly payments. So corporations are permitted to credit these overpayments against estimated quarterly income tax liabilities in the succeeding taxable year. So the overpaid income tax in 2021 is 25,000, which is very significant in our computation. Now, let's look at this information. So this is the computation. So you need to remember this table here. But what is us or what the problem us is for us to determine the income tax due after credit for the first 3 quarters of 2022 and compute the income tax payable on the um, final return of the company. So let's first look at the first quarter. So this is the computation of the first quarter. The first quarter, it has a gross profit of 400,000 and it has a deduction of 200,000. So that means the taxable income is 200,000. We use the normal tax instead of MCIT because if we calculate MCIT, it only result to 4,000 because 400,000, which is the gross profit, 1% of that is 4,000 only. But in normal tax, if we calculate the taxable income times 25%, which is 200,000 times 25%, it will result to 50,000. So you remember earlier that which is higher, it will be used in the calculation. So the normal tax is 50,000, and we less the overpaid tax in 2021, the one we calculated earlier, which is 25,000. So the first quarter tax payment is 25,000. Next is the second quarter. So the cumulative gross income increases to 600,000, while um, while cumulative deduction total 300,000, resulting in a taxable income of 300,000. So the normal tax is 75,000, which is 300,000 times 25%, resulting to 75,000, and the MCIT, which is the gross profit, is only 6,000. So we will use the 75,000. So again, the normal tax higher is therefore applied. So from the 75,000 tax due, total credits of 50,000, which is 25,000 from the prior year overpayment and 25,000 from the first quarter payment, are deducted, resulting in a second quarter tax payment of 25,000. Next is, let's proceed to the third quarter. So the cumulative gross profit for the first three quarters reaches 1 million, while the deduction amount to 600,000, yielding a cumulative taxable income of 400,000. So the normal tax is computed at 400,000 times 25%, which is 100,000. So from this, the total accumulated credit of 75,000 are deducted, which include the overpaid tax of 25,000, first quarter tax payment 25,000, and the second quarter 25,000. So that is 75,000, and we will deduct it from 100,000. It will result to 25,000. So the third quarter tax payment is 25,000. Next is, let's proceed, and the last one is the final adjustment return. So the final adjustment returns consolidates the corporation's full financial data to determine the total annual tax liability and reconcile it with prior payments. The corporation reports the total sales of 3,500,000 and cost of sales of 2,100,000, so resulting in a cumulative gross profit of 1,400,000. So after the deduction total operating expenses of 800,000, the taxable net income is computed at 600,000. So applying the 25% corporate income tax rate, result the total annual tax liability, which is normal tax of 150,000. Again, the normal tax, if we compute the 25% of 600,000, it will result to 150,000, but the MCIT is only 14,000, so we will use the 150,000. So to determine the final tax payable, all tax credit accumulated throughout the year are deducted from the total annual liability. So that these credits include the first quarter payment, which is 25,000 pesos. The second quarter payment is 25,000 again, and the third is 25,000. And also we deduct the overpayment from 2021, which is 25,000. So this results to 100,000. If then we deduct Therefore, we computed 150,000 minus 100,000, resulting to 50,000. So that is the final adjustment, the third quarter tax payment. So that is the end of the computation. So in conclusion, the CITR is essential for ensuring compliance in financial accuracy and responsible business operation. Understanding this kind of system equips future professionals with the knowledge needed to make information decisions, contribute effectively to both organizational success and national development. So that is all for my report, and thank you so much for listening.